Hello, hi guys, welcome back to Lighthouse. Right, thank you very much for watching another episode or another video of Stock Lighthouse on the market update of the US market. Alright, so just take a quick recap where we ended off last week video with the US S&P 500. Alright, so remember that last week we are actually looking at a sign that where US market actually has hit a short-term sideways move. Alright, and it actually end the day off where it seems to be broken its sideways trending support level, okay, which is closed on this candle, right, on last Friday itself. So what happened is when market actually opens on Monday, it went further down. Alright, so for those of you who actually have using this as a support level at the close of the market the next day, if you have entered somewhere around about 2,500 points, 2,540 points, 2,540 points around there, and you have actually short the market and the market closed on yesterday at 2416, you could already have made a very good profit. Alright, but if let's say you are a bit more conservative, alright, and if you didn't really actually went in at the market because you just want to be really sure before you did anything, of course, you can actually take reference point from the extreme low, the lowest point of the previous low, okay, which is somewhere around this point, alright, about 2530. Alright, so if you didn't enter where the point that I mentioned earlier, alright, instead, alright, sorry, just let me get this off. Alright, so if you didn't enter on the point earlier, you waited for this, the third blue line instead. Alright, the price closes on this day. If you have entered when the market opened, alright, here will be somewhere around 24, I would say about 25 around there, 2005, and then you short the market, you put a good roughly about 80 points to 90 points down from the S&P 500. Alright, of course, if you are really still unsure at this point of time whether this is a thing to look at, or in fact you missed the opportunity for some whatever reason, maybe because it's end of the year, you are actually enjoying partying already. Alright, it's okay. Okay, just so where is the next true entry? Actually, you can look at it is wait for S&P 500 to bounce back up, hitting any of this support level. Alright, after that then show signal to bounce back down. Alright, so at this point of time, all these location will be a good entry point to consider to enter. Alright, and hopefully the price will continue downwards in a bearish move. So at this point of time, it's really more or less confirmed that S&P 500 is on a bearish mode. We are in the bear market. Okay, the only question is how long will this bear market last? Okay, bear market doesn't mean that it always will continue and it will continue to go down. Okay, could be also a likelihood, that the S&P 500 just probably hit this support level and then go trend sideways and then shoot back up all the way for whatever reason. Okay, we really never know. Okay, just that these are some technical signs that actually we look out for to find a good probably entry. But now it's definitely not a good time to buy any position. Alright, if you are doing a buy position, that is what on the technical term we are saying that you're actually doing a counter trend trade. Alright, counter trend trade are usually short lived because once it hit a small level, when price come down, right, sorry, just let me redraw this. Okay, when price come down like this, it will retrace, okay, on a shorter move before it go back down on a big move again. Alright, so this, if you're buying at this point of time, you're actually doing this kind of counter trend trade, which is very short term, and you really never know when the thing will trigger to go back short down again. Alright, so it's a lot of risk. It can be done, but it's a lot more riskier. So if you're an investor or trader who are not used to actually doing counter trend trade, it's better to avoid this kind of trade. Just look out for good position where actually price bounce off certain key level, certain key resistance level, and show signs of bouncing back down. That is a place where it's a good time for you to re-enter or to shorting the market again. Alright, okay, so of course, looking at that, US for the whole last week have come down very aggressively. Right, for the whole last week. After that, once it broke all this level, it has come down very aggressively. There's a few main reason and factor why all this has been pushed down. Alright, Okay, the first thing is last week we have a very key important meeting by the FOMC. Alright, so the Fed chairman actually agreed, or rather continued to raise the interest rate from 2.25% to 2.5%. Although they have already been saying the market has been very volatile, price has been coming down, they shouldn't increase interest rate. Even Trump has stepped in to voice his opinion that they shouldn't increase interest rate, but the Fed chairman still think that they need to do what they need to do, continue the interest to increase the interest rate. However, they did have a lower projection for interest rate for 2019. Okay, they actually just have 2 increment instead of looking at 3 initially. Alright, so that is one of the reasons why it has been pushing price down, right? Because higher interest rate, that means it's harder, or rather more taxing for businesses to actually take on their loan, because they have to pay a higher interest back for whatever loan amount that they actually uses. And for a country like the emerging market will be taxing when they raise the interest rate, because they borrow USD actually to do trades to boost up their economy. By increasing the interest rate, that means that they have also had to pay more interest back based on the loan that they actually borrowed. So as an economy as a whole, it's rather taxing. They didn't want that to happen, but somehow the Fed still think that it's something that they need to do. They continue to increase the interest rate. Alright, so another thing to add on is actually something more within the US. Okay, Donald Trump actually has said that they're going to look at actually how to create funding for security reason, and if he can't get the fund, he's going to shut down the government temporarily, and he's willing and more than okay to actually go for a long shutdown with probably a week or so, right? As long as he don't get his budget in funding building out the barrels, the border walls that he want to actually do it at the southern part of US, right? So that could create a bit of fear for investors, because by shutting down the government, nothing is working. The economy may not be moving. That will slow down a lot of things. That's where investors will have a bit shaken on the confidence of the government, especially this point of time. They increase a lot more fear on this bear market movement now. So the price has dropped a lot more. Alright. So based on last Friday, the price conclusion, alright, at the when the market closes, alright, based out of the 3 indexes, okay, NASDAQ, where is the index actually have most of the tech companies in, alright, have officially dropped more than 20%. Alright, as you have known, okay, just a general guideline will say that when the market drop about 10%, it's just a correction. It's not a bear market. Anything 20% or more, okay, then it's went into correction. So in terms of the tech sector, just looking at the NASDAQ index, okay, it's really confirmed it has stepped into the bear market. Alright, so we don't know whether the Dow Jones will follow, the S&P 500 will follow, but based on the movement of all 3 indexes, all the stocks in US market is continue trending down. Very likely sooner or later, alright, S&P 500 and and the Dow Jones index will actually just follow suit and enter into a bear market pretty soon. Right, from there we are even more confirmed that the whole market is in a full force bear market movement. Alright, so at this point of time, what can we do? What can we look out for? Alright, okay, so if you have watched the previous video, and if you actually look at it, if you have saw what I mentioned, some of the stocks I mentioned, first thing, remember I did mention about Amazon. Alright, I did mention about Amazon. Alright, so if you are a CFD investor, when I mentioned last week the price was somewhere around here, if you are a CFD investor, you have really short the market, you could make a very good profit, because it had dropped about, for Amazon has dropped probably about $230 per share. Alright, but if you're an option investor, if you actually did a credit spread here, you are still pretty much just wait for the time decay, because it's right in your movement. Just wait for the time decay out, and then just continue to profit the premium. Alright, but of course, if you have the budget to actually do a buy put and short the market, alright, equally just like a CFD investor, you actually have made a very good return as well. Alright, so now we are coming to hit one temporary support level. Okay, you might want to consider to take profit if you are a very short-term investor. Alright, if you want to hold on to it, you may. Of course, that will actually look at whether Amazon will continue to trend to go up and continue to trend downwards. Alright, so that is one potential move that already have happened for Amazon. Alright, so this week, what are we looking at? So this week we can go a couple of stocks to look at. The first one, I look at it, the best friend of Amazon, Google. Alright, Google has came down as well. Alright, so as you can see that it came down all the way, then just not too long ago it actually bounced off the 200 simple moving average, kind of cut through the 50, but then came back down the 50 as well. All right, continue to trend downwards. All right, so yeah, what I'm looking at now is based on Google, it has a support level. Right, it has a support level right over here. Right, just as of Friday where the market closes, right, it broke through and closed below and broke this support level. All right, so if you are an investor, if you are more a risk taker investor, all right, if you want, you can actually start shorting your position here, do your entry here and hope that the price go down. All right, place your stop loss somewhere around here or around here, depend on your comfort level. All right, and it also depend on your portfolio sizing, whether you can actually hold such a big a wide gap or stop loss. All right, if you are not comfortable in entering at this level, of course you can always wait for the price to probably go down a bit more, come back out to either retest this level or wait for the price to go back up where it touches the simple moving average 50-day period and then show signs of bouncing back down again, then that could be another second chance of entry. All right, so if you are looking at to short Google right now, all right, of course for CUSD investors, straight away you just look for entry when market open on Monday. You can actually look at it, okay, to short the market. But do take note, Monday market, I think Monday is a short trading period because it's the eve of Christmas, right? It's probably going to be just a short trading day, right? Just do take note, right? So if you are an option investor, then what can you do? All right, as an option investor, because for Amazon, or rather for Google, we are talking about a stock that is close to $1,000, unless you really have a very big budget to actually hold on to bigger position size. All right, otherwise I would just recommend you to just do a short 1 month term. All right, if you want, you can actually just look at buying a put, okay, anticipating the price will continue to go down, right, at this price point of 980. So you are looking at paid about $38.50 around there, $38 on average, $38.50 per share, okay, on one contract of Google. All right, that means on one contract you have to spend about $3,850 USD, okay, just to get into one contract of buy put. All right, so that is one for Google. All right, so what about, so the other one you can look at it, potentially you can look at it is Nike. All right, as you can see, Nike is same thing. Nike actually forming consolidate for the short while and forming a downtrend pattern. As you can see, it's forming lower low. Lower high, lower low. All right. So yesterday or the day before, okay, they just have an earning announcement. Sorry, I think this announcement was actually shifted. Okay, just announced price shoot up. Okay, open higher, went higher for the day, but then throughout the whole trading day, seller keep pushing the price down and actually close lower than where they open. All right, and if you can, as you can see from the chart, all right, this candle closed very close, all right, to the simple moving average 200-day period, and it actually touches the 50 SMA. All right, so there's a possibility the price will actually bounce back down. So this is not a good entry at this point of time. What I'm looking out for is when price actually open another day, okay, to show signs that actually bounce off, okay, either the 200 or the 50. Anyway, they are sloping somewhere around the same area. So I'm looking at price to bounce off. When price bounce off this area, all right, then I'll actually look for an entry to enter, probably based on stop loss somewhere around this area. All right, this is an entry. This will be stop loss, okay, for those who are doing CFD. If not, for option investors, same thing. You can either looking to actually buy the put, okay, or you can actually do a credit spread, right at the top. Alright, that is one possibility. So I will not go into option change for this because nothing has happened yet. Alright, okay. So the other one that I'm actually looking at will be similar to what I mentioned in the previous video about emerging market. Alright, the emerging market ETF came down a bit as well. Okay, not a very big move, but a bit. So if you have missed that, another stock that I'm looking at still fall within the emerging market category, okay, will be the INDA, which is actually an ETF for India. Alright, okay, same thing. This is actually a technical play, technical analysis play. Okay, what do I mean by that? Alright, if you just let me zoom this out a bit for you. Oops, that's too much. Okay. So for India, it has been moving up quite a bit before all the news and things are happening on this year. Right, after this year, things start coming down because interest rate has been announced and raising. US trade war happened, things start coming down because of the high interest rate. India is affected as well. All right, so if I have, when I take a look at it, firstly is, alright, there's a key level that on a short-term basis that this ETF have is over this level. The price went up, okay, across this key level. Alright, then it start bouncing once, go back up, trade war happened, came down pretty close, go back up a bit, came down, bounce off. Alright, from here it break through. Alright, from here the breakthrough, then it start falling in within the same pattern and channel. Alright, okay. So why do I say that this stock could probably be a good entry? Why? Because at this point in time, you can take a look over here that the price actually bounced off the SMA 200 twice just recently. Alright, okay. As of Friday when the market closes, okay, as of Friday when the market closes, the candle actually closed on a bearish candle and closed lower. Alright, so it's actually giving me a good sign that here probably is a good entry. Alright, if I want to actually put a stop loss over this area, just above these two peaks. Okay, if I want to do it. But if you really want to be a bit more conservative, you might want to see where the candle close on the next entry is, because there's a key level over here. You might want to see if the level, if the candle close below this, then this will probably be a more safer entry, because price may actually hit here, bounce up and continue go or go sideways. Also, that's possibility. But it just, at this point in time, it just showed me that price has been rejected by the seller twice in this short-term occasion. Alright, by hitting the simple moving. So this support level, or rather this resistance level, is still pretty strong and holding it. So likely the price will probably going to come down or just going to trend sideways. Alright, so that is one possible entry to look at for India ETF. Alright, so if you're looking at options, what you can do for India ETF. Alright, so for India, because it's an ETF, alright, the price are generally not that high, yeah, because it's a basket of stocks. So so in that case, I'm more looking out something I can actually spend a little bit lesser but buy a bit more time for myself. Actually, I'm looking at a March contract. Okay, looking at a March contract, I will be looking at the strike price of 33. That's where you spend about, on average, about $1.60 per contract per share. Alright, so for one contract, roughly you need about $160 USD just to enter one contract. The reason why I picked this strike price is because this is the only strike price where the open interest, or rather in terms, that means that in terms of liquidity, alright, for this particular strike price contract is higher. That create a lot more flexibilities and liquidity for the trade itself. I don't want to be stuck by buying other trades where the liquidity is very low. I can't find a buyer or find a seller when I want to exit. Alright, so for India ETF, this is one of it I'm looking at. Alright, so for the rest of you who are not really into shorting the market, honestly at this point in time, there's really nothing much you can do. Okay, as of this week, but two key stocks, two key ETF you should look out for, because these two ETF are actually known to investors to use it to hedge against their portfolio in times of a bear market. Alright, so basically it's the TLT bond. Right, as you can see, the TLT bond, alright, has been moving aggressively up, okay, for the past 1 month, right, mainly because of all the uncertainty, and bonds usually go inverse direction with the stock market. Alright, so price has been shooting up. Okay, the same thing for TLT. Just to take note, there's one key level where it is now, pretty close to where the key level is now. Alright, TLT has, right, you have a key level over here. Previously it bounced off this level a couple of times. Okay, now, okay, so it has bounced off, now come back out. We are coming to probably going to test this again. Alright, so if the market picks up, definitely TLT is going to come down, but the market is going to get worse, as we know it's going to more likely, highly likely continue the bear market movement. There's a high chance that TLT will actually break this level and continue to go up. So once it breaks the level, this will be the next resistance level to look at. Alright, yeah, so TLT is one of them. So I would not recommend to enter now because it's right at a big move, right? So you can enter once it break this level. This is one possible entry. Alright, if you want to see it, this is one possible entry. When it breaks off of it, then you probably go higher. Alright, that's one. Two will be, you just wait for the price to come down to find a certain support level and bounce. Alright, so when you find a support level and bounce, then this point will be probably a second good entry to go in. Alright, but do take note, for this to move, okay, for this to happen, alright, do take note that your profit potential is limited. Okay, why? It's because it seems to be that this resistance level is still well respected. So even if you entry at this level, do take note that once it hit this level, there's a high tendency price will shoot back down again because of the resistance. Okay, but it may also go up, no one really knows. So at this point in time, you have to make your decision call whether do you want to exit with a small profit or hold on to it, giving your TLT a chance to actually break through. But if it doesn't, you might actually lose back your capital gain, or might, if it sudden drop a lot, you might even get into net losses. Right, so that's at that point in time, that's a decision you as an investor have to make. Right, okay, so the next one you can look at it, which is some of the investors to use it instead of using a bond, they use commodity, which is the gold ETF. In short, actually the GLD. Alright, so gold has been coming down quite aggressively at the start of the year, somewhere in the mid of the year, but now it has actually bounced up, and because of all the trade war and stuff, it has bounced up. Can obviously see that it start to form a new channel, right? But at this point in time, it's right at the peak, okay, right at the peak of the resistance level. In fact, now it seems to be touching and bouncing off the simple SMA 200, okay, which is probably going to use it as a resistance level as well. So it's definitely not a good entry point. We have to look out where it goes. It might actually it might just break through this and continue to go higher, as if the whole market is going to go down. Otherwise, it will just come back down, touch the support level and go back up again. Then this will be a good entry to actually enter. Alright, so I'm not going to go into the trade setup because for GLD and TLT are something that haven't happened yet. There's no point for me to go into the option change and things like that. So when it happens, when it comes to the time when the video is, of course I will mention it again. Otherwise, just keep a lookout, add it in your watch list. Alright, so that you just set alert when it happens, trigger yourself and you make a decision whether you want to actually enter such position. Alright, okay, so yeah, so for this week, that's it. The market has been choppy as usual, as I mentioned. The only thing is unexpected. The only thing that was unexpected because of all the news, especially particularly on the FOMC announcement, alright, that actually affected the market quite a bit. So initially I was expecting the market to actually pretty much trend this way, including FOMC or those things that news will not is an important news, but most likely they probably give some reason to delay in the early stage. But after the announcement, the whole market start crashing down. It's something I didn't foresee that would happen, but no one really know where the market is going. but now it confirms that it's on a bear market. We have to change the strategy to fit where the market is moving. Always trade with the trend. All right. So yeah. So for that's the end for this week. I think that's pretty much good info for you. All right. Anyway, there will not be a video coming up next week. It's because next week is a short trading week. All right. Tuesday is Christmas. All right. Monday is Christmas Eve. By the time Friday ends, then we are looking towards a new year again. All right. So just probably a good 2 to 3 days of trading days. I don't think the market will move quite a bit, but although I will still look out on the market. All right. So the next video will be crossing the year. All right. So that will give you an update. Hopefully, we have some news announcement before I do the video to give us a clear indicative direction where the market is heading, where are all the countries and the economy is actually pointing their efforts and work direction for next year 2019, so that we get a glimpse of where the market is going to move and what kind of strategy and patterns are we going to look out for. All right. So with that, just want to wish you a Merry Christmas and of course an advance Happy New Year. All right. I hope 2018 has been a great year for you, and 2019 is going to be an even better year for you. All right. So enjoy your holidays. All right. Okay. Have fun. Okay. Don't worry about the market so much. It's really the end of the year. Just enjoy yourself for the next week. All right. I will see you in 2019. All right. See ya and enjoy.